Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. End of the week, end of our first week back into the new year, and I have to say the new year has started off on a very, very strong note for many traders. And today we're going to go and look at the first week and just take a look at the process, the playbook trade setups, and see how the week played out with our underlying thesis of looking for a best trade setup in the session that you're trading. In the playbook, I have this quote right in the first page prior to the getting into the content. And I love this quote. Many of you have probably read this before. It's from the market. I believe Jack Schwager had it in the futures book that he wrote. But although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in the bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, but preferably one that is sick or lame. Only then, when there is no chance it can lose its prey, does it attack. That, to me, is the epitome of professional trading. And that quote was by Mark Weinstein in one of the Market Wizards. And I believe that to be true, and that once you understand how these setups build, and that coming to the screen for your session and identifying the opportunity in that session on the instruments that you have in your basket for a best trade setup, and understanding how they're scalable in size, and then locking that in and walking away. Now, this is how my approach to the market. I know there's traders, for example, one trader messaged me that he sold the high of London in gold, the high of the week, and was holding on to it, which is entirely, it was a fantastic trade. My approach is that I want to be able to come and identify the trade setup in the session and then be able to execute that trade with size and continue to grow that size over time through my results and my consistency, because I only want to be at the screen for an hour, maybe two tops. And I want to make as much money as I can. I don't want to be holding on to something to try and get as many pips. I want to be able to max out the opportunity and keep growing that in size. Because, my being at the screen, the longer you're at the screen, the more likely you will make mistakes or give it back, or you will allow the market to come back into a profitable trade, or you will overtrade, or potentially make a mistake. The market will change as the volume thins out and the algo kicks in. It will have different behavior to manufacture a false market or a different type of market, an interbank market. But the point is that when you have these best trade setups and you see the reproducibility of them over time, and it's about low stress, not about trying to figure out every direction and move of the market. It's about executing the best trade setups. Talk about this because it's about making things low stress. Focus on the 90-10 setups, 90% opportunities. So if you come to the screen and you can't see that, and you don't have a thesis to plan, prepare, and execute a trade, don't worry about it. Find one that you can identify. Don't waste time on something and try to figure it out. If you can't easily recognize it, then it's not there, or you're not seeing that opportunity for that type of setup just yet and how it builds and evolves. And as I've stated over and over again, it's either going to be a pump and dump or a dump and pump in terms of the trade scenario itself. So the opening range and initial balance are key for all of these setups, and we're going to demonstrate that today. 3-day setups, 3-session setups, and that's where you may come to the screen and there might be a perfect trigger day signal, but in your session, your thesis is first red day, but you come to the screen in London and you're looking for that first red day trade, but it's not there. You don't want to force it, because remember, some of these are going to be 3-session setups on day 3. Some of it may coincide around news, and today is a perfect example of that. And we will go through all the pairs and talk about the process. So opening range and initial balance, major red news, the timing of everything, and then just the basic model we have for entering the trade. It's so simple. Obviously we can get more advanced right down to the 1 minute, but the same process applies. Once you get this down, executing on the 1 minute becomes easy, because now it's about understanding that the setup is completing. Like the first bounce, we go to the 1 minute. Because once it's there, we already know what we're doing, how we're getting in, how we're going to manage our risk, and where we're going to lock in the money. So we got 3-day setups, 3-session setups, Monday's opening range and initial balance. That's the key. Day 3 longs, day 3 shorts, first red day, first green day, the inside day. Now, one of the things that we talked about is that false breaks can be the beginning of large moves. So we're going to walk through this process on the pairs. I'm not going to go overboard and talk forever. I'm going to try and keep this video short so that traders can just go back, do their homework, do their notes, comb through everything, and understand the process is there and it reproduces over and over again. So just to start, we can take a look at gold. We talked about the daily chart. We talked about the parabolic setup on the daily chart, and on the day we had news later on Wednesday, and I mentioned not to counter trend that particular setup. Now, the next day we had that market break down, and then today we've had the follow through on that. And again, this parabolic setup is one of the setups that we have identified in the playbook for trend continuations. But I'm just going to walk through the big picture coming into Friday. We had our opening range on Tuesday. We had that market break out on Wednesday. And then we had the breakdown on Thursday. So we had our opening range, high low of the week, initial balance, Tuesday, Wednesday. No trading on Monday for gold. But we had our high low. We had the breakout that failed. Then we had the U.S. session low-hanging fruit trade on Thursday. And then we had a breakout of Wednesday's low. We had a breakout on Wednesday that failed. That becomes our high of the week. So we had our opening range Tuesday, Wednesday. In this particular case, there's no Monday, so Tuesday is our opening range. The breakout failed. We had a low-hanging fruit trade in the U.S. session on Thursday, and a breakout of Wednesday's low of the day that pulled back inside today. Day 1, day 2, Friday becomes our day 3. Now, for the people who don't like the hindsight, remember, hindsight pays, because we had major red news on the calendar today. So when the major red news goes vertical, we look for the first bounce trade opportunity. We had 2 sets of major red news today. I just used Forex Factory, but we had obviously Canadian unemployment. We had non-farm payrolls, and then at 10 a.m., so 8:30 a.m. for non-farm, and then 10 a.m. ISM services PMI. So one trader mentioned he didn't take any trades because there was too much news on the schedule. Here's the thing about major red news. I will only trade major red news when there is a setup. And then after the news, the setup has to be in place for the first bounce opportunity. So after 10 a.m., the day is on. There's no more news. If there is a first bounce trade, if you haven't taken anything up until 10 a.m., after 10 a.m. news is released, I'm looking for first bounce. Now, in 8:30, if I get a first bounce, I will take that trade too, but I will lock in the money or take the majority of that If the setup is there, the majority of that off. If you don't trade until after the news, there isn't too much news. It's whether or not there's a setup. And then after the news, do I have an entry that fulfills the criteria of the first bounce trade setup out of the playbook? False break, day 1. Thursday, day 2, to the low of the week. Breaks out of Wednesday's low, pulls back inside. Trades back into the failed breakout. Goes vertical in the long direction after the news. So, I repeat, after the news. It didn't go down through the low of the week. It broke out. We have a failed breakout. So let's review the process. I'm going to do it on this one and then we'll walk through the other ones. But I want to repeat this. When we break out of a daily level and we have not a false break, a breakout. We have breakout traders in the market. Where is the money? The money is below the previous day's low. We're talking about other time frame traders. The bigger picture. Regardless if this is manufactured, as one trader said, false volume, whatever else, doesn't matter. Breaks out at the high, there's money at the low. The breakout fails, they go down to the low and break out. When they break out of Wednesday's low, there's money at the high. The next day, we lower that down with the assumption that traders are now tightening up their stops or they're trailing what they perceive to be a profitable position on a longer time frame. We're talking about bigger players, longer time frames, institutional money, or institutional setups. When we break down and we get this pin, this was a dead giveaway. That's a snowplow. That clears all the lower level shorts out, and then they trap traders down low. Where is the bulk of the trading taking place on Friday heading into payrolls? Down low, but they're not going below the failed breakout. This now, if this is a failed breakout at the low of the week, this now becomes our, take a guess, day 1. Day 1 for the new 3-day cycle. Day 1, day 2, day 3 is our payrolls Friday. False break, reversal into the news was the first bounce trade. Where is the money? Now I mentioned this on Wednesday about possible parabolic setup, clearing out all the way up for a second range expansion up towards that 19,270 area. Now I also mentioned after the short squeeze to not counter trend this move. Now this obviously broke down second hour. We had news and then broke down on the Thursday. But the point with this is that on the daily parabolic setup, I mentioned DNC. Do not counter trend. Do not counter trend means, yes, if you have a short trade, as we did on Thursday, low-hanging fruit after the breakdown, the pump up, and then the short trade in the U.S. session. The point of the do not counter trend is don't be going in super heavy with size on day 4, day 5 here. On Friday, we didn't have a day 1 on Monday, because when this market broke out and failed, if you were counter trending this or looking for a short trade at the high of the day, you were going to get smashed. They are going all the way back up to the high of the week and potentially maybe even further. As we see on the daily chart, they have room to continue with that measured move. Just a simple measured move, range expansion of the high-low of that parabolic setup takes us potentially up somewhere maybe again that 19,270 area. But we, this market could go all the way back up. I have no idea. But the parabolic setup was there to DNC, do not counter trend. Taking a scalp, no problem. But the size is the opportunity potentially after the news to get in for the vertical move. Now I mentioned this in the parabolic section about traders who counter trend. Parabolic setups will get blown up. Do not counter trend these setups, especially if it is a 3-day setup. This is a 3-day parabolic short squeeze with a news catalyst on day 3 after payrolls and after ISM services. Payrolls is the break in structure that clears everything out, and then ISM services after the New York Open and the 10 a.m. news gives traders the first bounce for the entry back into the market. And in this particular case, as soon as the news was released, we had our first bounce. And in a momentum market like this, I will use a 20 pip max stop max, and I will enter in because this should not come back. We already have the explosive move on payrolls. So some traders took the first bounce on payrolls. The second trade, the news is done now. This is an explosive move. There should be no pullback. And we had our first bounce, and that market continued. We had an entry roughly in the area of 485, 486, and that market is up now at 690 something. So a 200 pip move, and with room to go, as we saw, because we're in line with the parabolic daily setup. Day 1, day 2, day 3. Go back and watch yesterday's videos about failed breakouts. Most breakouts fail. We have a failed breakout at the high of the week. Day 1. Day 2. Failed breakout. The news goes vertical on the inside. Clears everything out. Breakout pullback. First bounce entry after the news. No more news on the schedule. We're trading into the end of the weekend. You've heard me say this. On a payrolls Friday, we have double news. This setup is not coming back. It will close probably at the high of the day. Traders are trying to counter trend this at the high of the week, the high of the day. It is not coming back. So coming back to our big picture again, we had a opening range on Monday, inside bar on Canadian dollar. We had a Asia set a high and a low. It broke out, pulled back inside on our Tuesday. We have inside bar traders, the breakout on the downside. The low of the day failed and reversed, and then they went vertical and broke out again on our Tuesday. Our initial balance is now in place. Day 1, day 2, day 3 gave a reversal trade. High of the day, high of the session in London, and then a low-hanging fruit continuation trade in the U.S. There is our high and low for the week. Monday, Tuesday, initial balance. We have a breakout. We had breakout on Tuesday, day 1. Day 2 breaks down and breaks the low of Monday, the inside bar, and pulls back inside. We have an inside bar on Thursday. We know what the inside bar trade setup is. Page 69, we go over the inside day setup. So we have opening range, initial balance, failed breakout, day 1, day 2, inside bar, failed breakout, inside bar, breakout on Friday, heading into payrolls. Low of the week, day 1, inside bar, day 2, failed breakout, so we start our day count. Low of the week is day 1. Day 2 is the inside bar. They break out on Friday, heading into payrolls. Payrolls then, and for unemployment Canadian at 8:30 as well. The go-to setup on major red news is the first bounce trade. Now this is the 1-minute chart, but obviously we saw already this is broken down. It gave first bounce entry after payrolls and Canadian unemployment. Then we had ISM at 10 a.m. The same process applies. Now, I talked about the low of the day and the date and measuring the strike zone. Some traders have sent me a bunch of questions how to do all that. It's all in the videos. It's all in there. I explain in detail how to measure your strike zones. It's from low of day or high of day, but in this particular case, you don't have you can measure 25 to 50 pips up. Now, if we just take the low of this candle, it's at 21. We had 50 pips. That's 71. 71 is, we'll just measure this off and mark it. There's a process to everything that you should be able to do. But once you see this, you don't even need to measure that, because the timing of everything will tell you what you need to do. If the low of the day is at 21 and 25 and 50 are the potential areas, 21 and 25 is 46. We'll just put these lines in so traders can visualize this. After the news, it's first bounce. After the news, it's first bounce. We have our news candle. I'll just highlight that for traders to see. We're in a broken down market. Remember what the inside bar. We've broken out and failed. Where is the money? We can only go short. First bounce, news is over, and the market continues to go down to the low of the day. We broke out of the high of the day of the inside bar. We're heading back to the low of the week. So we'll just walk through this a bit quicker. So we have our opening, we're US Swiss, inside bar, breakout, high and low of the week are now potentially in place after the initial bounce. 80% of the time or greater. Once Tuesday has traded, the high and the low will be in place. One of those extremes will tend to hold. High of the week, day 1, day 2, day 3 reverses on Thursday from the low of our consolidation. Non-farm ADP reversed and came back up to the high of the day before pulling back briefly and then triggering the high of the week in 3 bursts. We'll zoom in on this so traders can see. You can go back and mark your own charts. 1 push, 2 push, break in structure. Remember what I said about the break in structure. When it's on the inside up top, think pump and dump. I'm going to keep saying this in every video. If it's a break in structure up top, think pump and dump. If it's a break in structure down low on the inside, think dump and pump. There's our ISM news candle. So again, after the news, first bounce. And ISM on the Swiss franc, after the news was released, that was the first bounce entry for a move back through the low of the day. And that trade is just approaching 100 pips. And this, again, we have a failed breakout up top. I'll just reset this. We have a failed breakout up top at the high of the day, high of the week. Where is the money? I'm not sure if it'll get there today or Monday morning or when it will get there, but where is the money? So you can go back, and in the interest of time, I'll just speed this up. If you want to see what a reset is, go and look at the Japanese yen. We had our day 1, day 2, day 3. We had first green day, and then the trend continuation trade on Wednesday. This is the textbook day 2 where we measured down from the high of the day. They put a peak formation low in London, went into consolidation for the parabolic US session trade. Again, the same setup, just on a smaller time frame. The parabolic setup on day 3, Monday, Tuesday, Wednesday, after the failed breakout. Monday, Tuesday sets the high and the low for a week. There's our initial balance. Parabolic move. The count starts again for the new 3-day cycle. Day 1, day 2, day 3, nothing happens. This is why you get a reset, because we don't roll over and fail. People email me and say, it was day 3 on Thursday and it kept going higher. That's because that's a reset. A reset. Peak formation below, and then it breaks out. That becomes our new peak formation low. High of day, high of week, short trade opportunity. We have 2 major sets of news on the calendar. So the hindsighters are saying, well, that all looks great in hindsight, except after the news, what is your thesis? What is your thesis? We've broken out. Payrolls has gone vertical on the inside. Did I not just say, if it breaks down on the inside, that's a break in structure on the inside at the high of the week. What are we looking for? Pump and dump. Heading into the news, back into the breakout level. That's our breakout that failed. They pump it back up into the failed breakout. First bounce is on the news candle after ISM services. That trade has gone over 100 pips. So again, we're talking about momentum-based trades after the news, the process, opening range, initial balance, breakout trades, the session, the setup, whether or not there's a setup in the session that you're trading, day 1, day 2, day 3. So we have a reset, day 1, day 2, day 3. That becomes a breakout, day 1 longs, day 2 longs, day 3 longs, that eventuates after the reset. That's the third day of breakout traders in the market. Day 3 longs, day 3 shorts, reversals, page 51. It's good to walk through each pair so that you can see the different variations. We had our inside bar on the British pound, the breakdown, first red day trade on Tuesday for the short trade, and then we reversed. We got a false breakout. Day 1, day 2, day 3 breaks down again. Remember, break and structure on the inside. We look for pump and dump. That's it. That's all we're doing. Looking for pump and dumps and dump and pumps. US session low-hanging fruit on Thursday. So let's go back to the initial breakdown. That becomes our day 1, right? Breaks down below. They pump it back up. That breakdown is our high of the week. That's our high of the week with our Monday, Tuesday. That breaks down, day 1, day 2, day 3, low of the week. So we get a breakout that fails on our Wednesday, Thursday, Friday. Friday breaks out. And all the trading volume, manufactured volume, whatever we want to call it, is down low. High of the week, low of the week, day 1, day 2, day 3. Payrolls goes vertical. It goes vertical on the inside. So this is, remember, the news goes vertical on the inside. We're not trading this. We're not going, we're getting in on hindsight. We're letting them set it up. They go vertical on the inside. What does that tell us? Dump and pump. So now we wait for the news. They've broken out and failed. Where is the money? First bounce entry after ISM, after the news, low of week, high of week. This trade has gone over 150 pips. West Texas spot crude's the same. We had our day 1 high of the week on Monday, breakout, false break that failed. Day 1, day 2, thesis now. Again, this is Tuesday. We didn't have a Monday, but that's our day 1 for the week. Day 1, day 2. Initial balance, our high-low for the week, 80% of the time, may be in place now. We get a first green day on Thursday. Thursday close is above the open. We get a buy. We're looking for a low of the day buy opportunity. First green day, page 64. And lo and behold, heading into payrolls, we had a low of the day possible opportunity for a low of the day buy opportunity after first green day. And that entry was taken after the news, after payrolls, at 8:37 a.m. this morning for an easy 100 pip move, zero stress, prior to the second hour and prior to ISM. Now this was a market that some traders shorted after took out the high of the day and broke down. Great trade. That was an easy 50 pips coming back the other way. But the first bounce trade was after payrolls. Nice coil for the explosive move. Zero stress, sizable, scalable, first green day trade opportunity on oil. Now, this first green day potentially has failed as later in the session, traders have had a high of day selling opportunity later in the session. Now, one of the things I talked about with first green day is that we can still have a second day after the first green day trade opportunity that can go vertical and parabolic. I don't know what's going to happen. I won't know until the market sets up. But this higher high on the inside now could potentially become a break in structure. Now, if it breaks down on Monday, Tuesday, and goes the other way, then there's no setup. But if this market reverses and we get a setup, we may see something come back inside. We have a breakout from Wednesday. We have breakout traders in the market on Wednesday. My thesis originally was that this market had room to come back up and get breakout traders from Wednesday that are still in the money. You'll notice the gap between today's high and that breakout trade, so still plenty of room to come back. Now this market could break down and continue to go lower. There is room on the downside. I have no idea. Where it's going to go, but when I come to the screen for my session on Monday, I will have a better idea as to whether or not we have a setup for a long trade, a short trade, a 3-day setup. We now have a higher high. No idea. But these bigger time frames, beginning of the month, we now have a move down into the low of December. This market has made higher highs on the move up into the end of the month, heading into January. This could be a short squeeze building up. No idea. But I know that this pair gave excellent trades almost every single day this week in my U.S. session, and that will continue next week and the week after, and for the next month and the month after, and probably the next years after. Big thing to repeat to yourself over and over again is day 1, day 2, day 3. So just looking at the indexes quickly, and then we'll close it off. We had a high-low establish the opening range of Asia. They broke out in London and failed on our DJ30. That market closed back inside of the breakout on Monday, but that set our opening range. Sorry, this is Tuesday. The index did not trade on Monday. This is Tuesday, but that's our opening range for the week. So that becomes our high-low for the week. High-low for the week. We have day 1. We have a breakout that failed at the high of our opening range in Asia. Asia set the high-low, then they expanded the range. That breakout failed, and it failed on the downside. Tuesday. Day 1. Wednesday was a inside bar. So we know that, again, without jumping back to the playbook, we know what our inside bar strategies are. Didn't get that until we had a high of the day sell in the U.S. session. We had a vertical move that broke out. The market broke out at the low of our opening range, broke the low of the inside bar, and pulled back inside. We have volume now below the breakout of Thursday's low. And again, on payrolls, that market went vertical. So after the news, they broke up on the inside. That's a break in structure. And I've said this in many videos. The news can often be a break in structure, which makes the first bounce easier to recognize. Day 1, inside bar. Day 2, low of the week. There's our high low, 80% plus. One of these extremes may tend to hold. Day 3, so for traders who ask, do you restart the counter? No. The inside bar is exactly that. It's inside, but it's still day 1, day 2, except nothing happens. This becomes our day 2. Day 2, day 3, but we have inside bar traders in the market, and we have a breakout of a low of the day. Low of the day, low of the week. They go vertical on the inside. Thesis is first bounce back to the high of the week. Where is the money? They failed. The breakout failed. Go watch yesterday's video again. The breakout failed. Breakout fails. We have higher highs on the inside. Higher high. Higher high. Think dump and pump. News candle, first bounce entry. DJ30, all the indexes were the same, so you can go and review these. The entry on this pair was roughly 332. We're now up at 750-ish, so a 400 pip move, and again, this pair may continue to close into the extreme. No stress, zero heat trading. have a thesis, have best playbook trade setups, come to the screen, be patient and wait, just like that quote we read right at the beginning of the video. Understand what you are looking for. Be patient. Understand when you can size in. Wait for the news. Have a thesis for the news catalyst as a setup with your 15-minute bigger picture template. 1 bar stop, because this is a momentum trade. Momentum trades should not come back. It should explode and continue to move. So hopefully you got value from today's video, traders. Go back, study your playbooks. Review. Go back and review and just start the process. Monday, opening range. Understand how to do the 3-day count and understand the difference between the 3-day count and day 3 breakouts. Big difference. We explain that thoroughly in the playbook. Again, tons of traders, I think, as one trader said, he's paid for the playbook 10 times over in the first week. And that's what I want to hear. The same setups are going to happen next week. So if you master this, everything changes. And you can keep it going and keep it growing. New saying for 2023, keep it going and keep it growing. Have a great weekend, traders. I appreciate all the feedback. And again, going to be adding in specific case studies into the resources folder just to break things down into more detail about exact entries, timings, the whole thing, and just keeping it simple. It should be getting simpler and easier every week, and turn this into a business, a profitable, growing business. 6 figures, 7 figures, wherever you want to take it. Have a great weekend, and may the markets go with you.